Welcome back, dear traders. Here is a red-hot review of the US markets. Yesterday, Wall Street key indexes closed the crucial volatile day with an explosive growth. The Fed's policy meeting did not cause a sensation and brought long-awaited clarity. As the result, stock investors felt relieved. The question is how long the stock market is able to develop a rally. The Dow Jones closed yesterday with a 2.8% gain. The Nasdaq closed 3.2% up, and the S&P 500 logged the biggest intraday growth for the last 2 years. The index jumped 3% to close at 4,275 points. Judging by the American pre-market, optimism is ebbing away. The major stock indexes are slipping. Analysts expect the S&P 500 to trade between 4,240 and 4,320 points. The culprit of the optimism on Wall Street is the Federal Reserve and Jerome Powell in particular. The regulator raised the official funds rate by 50 basis points as expected. Besides, the Fed will begin scaling down its balance sheet by almost $9 trillion starting from next month. The following speech by Jerome Powell brought comfort. He spoke with the same hawkish rhetoric. He confirmed the agenda for aggressive monetary tightening. However, at his press conference, Powell excluded the scenario of a rate hike by 75 basis points. So he calmed investors down. Analysts highlighted incredible clarity in his speech. Powell sent a message of further rate hikes with a pace of 0.5% at a few meetings. However, his words did not heal the wound of the market. In the coming weeks, we will see whether the market believed the Fed's leader. There are a lot of factors that could assure the regulator to toughen its stance. For example, the inflation data for April. Besides a series of sharp rate hikes of 50 basis points each means the most aggressive tightening since 1994. Thus, after the emotional growth, the market will mull over the risks that remain the same. After the emotional rally, the US dollar is set to shine again, and yesterday its index sank to 102.80 for the same reason why the stock market perked up. However, today the greenback is regaining its footing. The expected CAD for today is defined between 102.90 and 103.30. The US dollar tumbled 1% in light of Jerome Powell's statement that the Fed did not consider a faster rate hike by 75 basis points. Today, after the market had digested this information, the US dollar is gaining ground. The outlook is bullish. Today, the US Labor Department reported that initial unemployment claims grew by 19,000 to 200,000 last week from 181,000 in the previous week. It's the highest reading since mid-February that causes concern over the labor market. The USD CAD pair went down to trade at 1.2720. The currency pair is likely to trade in the corridor between 1.2600 and 1.28. The trading instrument declined amid the painful fall of the greenback. Discussions about the oil embargo are pushing oil prices up. Yesterday, Brent futures topped the level of $100 a barrel, and WTI climbed to $108. And today, oil prices are extending a moderate rally, and in this context, the Canadian dollar asserted strength because high oil prices support a surplus in Canada's trade balance. As long as the oil prices trade above $100, the loonie has a good chance to push the greenback down. Canada is a large oil exporter, and the Bank of Canada is known for its hawkish rhetoric. Thus, the geopolitical situation suggests bullish prospects for the Canadian dollar. Like Wall Street, the crypto market welcomed the Fed's policy decision and Powell's speech, Bitcoin rose 4.71% intraday to trade at $39,541, and today the crypto market is keeping on with its growth. Bitcoin is likely to make efforts to settle above $40,000, however, the uptrend raises doubts. Despite the softer stance of the US Fed, investors have no reason to buy risky assets. Markets are taking a pause. Today, the flagship cryptocurrency is likely to trade higher. Analysts doubt that Bitcoin is able to gain bullish momentum and settle above 40,000. The trading corridor for today is defined between 38,300 and $40,040. And that's what our analysts foresee for today's New York session. A decline following an explosive rally is a realistic scenario. The US Fed cleared up its agenda, but volatility remains high. So make well-rounded trading decisions and follow news on InstaForex TV channel. See you tomorrow.